Now it's time for a market update. So, the month of October, we face several challenges throughout global markets. Number one, economic contraction and a slowdown. We're still growing here in the United States, but at a slower rate than we were earlier in the year. Also, the Eurozone has experienced a contraction. So, this played a role in some of what we saw with the volatility in October. Number two, interest rates and inflation. Central banks around the world, but most notably in the United States, have been raising interest rates to combat inflation. This increases borrowing costs, not just for consumers, but for business owners looking to expand. Number three, geopolitical tensions. Recent events in the Middle East have created a sense of instability and some uncertainty throughout global markets, which also has led to some of the more recent volatility. The Dow Jones Industrial Average actually entered into negative territory in October, and bonds continued to struggle. However, in the month of November, markets have started to show signs of a rebound. Number one, monetary policy shifts. Comments from Federal Chairman Jerome Powell have suggested that the Federal Reserve may be taking a less aggressive stance on interest rates. This has created some sense of optimism because if borrowers have lower costs, then they can put more investments into the economy. Number two, yield movements. Yields have actually started to come down, which is a good thing for bonds, and it's also showing that people are investing more in bonds, which could be a sign that we're getting a little bit more confident in the overall economy. Number three, seasonal trends. We've talked about this a little bit in the past, but September and October tend to be tougher months for the market, whereas November and December can occasionally bring what they call a Santa Claus rally. Although there's really no fundamentals behind this, there is something to be said about the momentum and what the market expects seasonally. The S&P 500 specifically is now on track for one of its best weeks since last November. So this is a sharp contrast from what we experienced in October. So as of right now, we're maintaining a sense of cautious optimism. Hopefully, what we've seen so far in November will carry us out through the rest of the year. I hope that helps. As always, please give us a call if you have any questions.